Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden secrets of company filings, and today we are diving deep into Grayscale Solana Trust ETF's latest quarterly report. And let me tell you, this filing gives us a peek into some serious shifts in the crypto world and how big players are navigating it. Before we jump into the numbers, if you are interested in understanding what these financial documents really mean for the companies you invest in, or are just curious about Wall Street's inner workings, you have come to the right place. Make sure you are subscribed so you do not miss any of our future explorations. And hey, if you want to chat with other like-minded folks and get even more exclusive insights, the link to our Discord community is in the description down below. So what is this report all about? Well, it is basically Grayscale's update on how their Solana Trust ETF is doing as of the 30th of September 2025. Think of it as a financial checkup for a fund that holds Solana, the digital currency. We will be looking at their investments, their performance, and some pretty significant changes that have happened or are about to happen. Let us start with the basics. This is a Form 10-Q, a quarterly report that publicly traded companies have to file with the United States Securities and Exchange Commission. The CC, it gives us a snapshot of their financial health and important business developments during the last quarter. For Grayscale Solana Trust ETF, this period ended on the 30th of September 2025. Now let us get to the numbers. If we look at the statements of assets and liabilities, we see the trust's financial position at two key points. As of the 30th of September 2025, the total assets were about $109.7 million. Fast forward to the 31st of December 2024, that figure was around $102.6 million. This shows a growth in the trust's overall value. Looking at the net assets, it is a similar story with $109.7 million at the end of September 2025 and $102.6 million at the end of 2024. Importantly, there are no listed liabilities, which makes things quite clean. And for those of you tracking shares, the number of shares issued and outstanding has also been steadily increasing. What is driving these assets, you ask? Almost entirely, it is their investment in Solana or SOL as of the 30th of September 2025. The trust held over 525,000 units of SOL valued at roughly $109.7 million. Their cost for this investment was around $67.7 million. This means the underlying asset has significantly increased in value. This is the core of their business to hold SOL and for the value of their shares to track its price minus expenses. It is like owning a piece of a digital gold bar, but in this case, the gold is digital currency. Now let us talk about performance. The statements of operations tell us how much money the trust has made or lost. For the 3 months ending the 30th of September 2025, the net increase in net assets from operations was about $26.3 million. This is a big jump compared to the same period in 2024 when it was just over $4.5 million. The 9-month period also shows a strong increase in 2025 compared to 2024. The lion's share of these gains comes from the net change in unrealized appreciation on their investment in SOL, meaning the SOL they hold has gone up in value. For example, in the 3 months of 2025, the unrealized appreciation was over $26.7 million. That is a huge boost. The sponsor's fee is the main expense listed here, which is a fee paid to the company that manages the trust. These statements show how the trust's net assets have changed over time. For the 3 months ending the 30th of September 2025, net assets increased by about $26.3 million from operations. There were no new shares issued in this specific quarter by the looks of it. However, looking back at 2024, we see significant increases in net assets from capital share transactions, meaning new shares were created and sold to investors during that time. This tells us about investor demand. Now we get into the footnotes, and this is often where the most important context is found. This section tells us about how the trust was formed. It mentions that in connection with the uplisting of shares to the NYSE, the trust has authorized the commencement of a redemption program on the 28th of October 2025. This is a big deal because it means investors will have a more direct way to buy and sell shares. It also talks about the trust becoming an SEC reporting company with its shares registered on the NYSE, a major step up from its previous trading venue. The details about changes to the trust agreement and service providers are crucial here. Here they explain how they do their accounting. They use fair value for accounting for SOL, which is pretty standard for investment companies. They also mention that they do not hold cash or cash equivalents, which is interesting. It means they are all in on SOL. This is where they explain how they decide the price of SOL for their financial statements. They look at market volume and activity to determine the principal market. This is important because it is how they value their main asset. They focus on trading platform markets because those have the most volume and activity. This table shows how they value their assets. For the Trust Sol is the only asset and it is valued at $15.17 per S-hair on the 30th of September 2025. All of this valuation falls under level 1 inputs, meaning it's based on unadjusted quoted prices in active markets. This indicates a high degree of transparency and observability for the asset. The trust operates as a single segment, which is expected for a fund that solely invests in one asset. The chief operating decision maker, or COD, monitors the trust as a whole. This is where we see the actual price of SOL being reported per unit. On the 30th of September 2025, it was $208.92 per SOL, and back on the 31st of December 2024, it was $193.69 per SOL. This shows a healthy price increase for the digital asset itself. This section details how shares are created and redeemed. Importantly, it notes that as of the 30th of September 2025, the trust was not accepting redemption requests, but this changed on the 28th of October 2025 with the uplisting. This marks a significant shift in how investors can interact with the trust. They believe the trust is a granted trust for tax purposes, meaning the tax burden flows through to the shareholders and the trust itself is not taxed. This simplifies things for the trust's operations. This is where we see interactions with affiliated companies. It highlights that on the 27th of October 2025, the sponsor's fee was reduced from 2.5% to 0.35%. This is a massive reduction and likely aimed at making the trust more competitive. The fee is paid in SOL, which is an interesting detail how they manage their expenses. Here they lay out the risks. They mention market risk, liquidity risk, and risks tied to concentrating in a single asset like SOL. They also touch on the uncertainty surrounding SOL possibly being classified as a security, which could have major implications. They also talk about the risk of losing private keys and the potential for disruptions from third-party service providers. This section is a bit of a reality check on the inherent volatility and regulatory unknowns in the digital asset space. This table gives us a per S-hair view of performance. For the 3 months ending the 30th of September 2025, the total return was 31.57%, reflecting strong gains. For the 9-month period, it was 5.86%. This shows the impact of SOL price movements on the share value. This is a critical section for understanding what has happened since the reporting period ended. The shares began trading on the NYSE Arca on the 29th of October 2025. The sponsor's fee was indeed reduced to 0.35% effective on that date. A redemption program was authorized and commenced, meaning investors can now create and redeem shares more easily. They also mention entering into new agreements with custodians and transfer agents. A significant event is the commencement of staking SOL on the 6th of October 2025. Staking means earning rewards for holding and supporting the network, which could be another source of income for the trust. They also detail fee structures related to staking, which are quite intricate. This section reiterates the significant event of the shares listing on the NYSE Arca. This is a major endorsement and increases the trust's visibility and accessibility to a broader range of investors. They again emphasize the start of the redemption program. This is crucial for making the ETF more efficient and aligned with traditional ETFs, allowing for arbitrage mechanisms that help keep the share price close to the net asset value. Here they break down the performance numbers. They highlight the net realized and unrealized gain on investment in SOL for the 3 months ended the 30th of September 2025 as $26.9 million, a substantial increase compared to the prior year. This gain is largely driven by the appreciation of SOL itself. They also note the net increase in net assets resulting from operations, which is a direct reflection of the trust's profitability over the period. Interestingly, they state the trust does not intend to hold cash except for facilitating creations and redemptions. This signifies a lean operational model focused entirely on holding the underlying digital asset. This table provides a summary of SOL holdings and share counts over time. We can see the opening and closing balances of SOL and how they change due to creations and fees. The price of SOL on the principal market is also provided, showing its significant increase from $154.98 on the 30th of September 2024 to $208.92 on the 30th of September 2025. This is a very direct way to see the asset's performance and its impact on the trust. This section visually represents the performance. The charts show the movement of the trust's net asset value, or NAV, per S-hair against the price of SOL and the index price. Before October 2025, the trading prices on OTCQX were at times quite far from the actual net asset value, indicating a discount or premium. However, after the uplisting to NICE ARCA, they note that the trust has begun to meet its investment objective more closely. This suggests increased market efficiency and better alignment between share price and asset value post-uplisting. Here they confirm the trust does not use leveraged derivatives or foreign currencies, avoiding certain complex market risks. The primary risk remains directly tied to the price of SOL. This part confirms that management has evaluated the trust's disclosure controls and procedures, and found them to be effective, meaning the company is providing accurate and timely information to investors. Finally, we have the signatures from the principal executive and financial officers of the sponsor Grayscale Investments Sponsors Incorporated. This legally validates the report. Now, for my take on all of this, Grayscale Solana Trust ETF for the period ending the 30th of September 2025 and leading into their major uplisting on the 29th of October 2025 shows a clear strategy of positioning itself for greater investor access and efficiency. The reduction in the sponsor's fee from a hefty 2.5% to a much more palatable 0.35% is a very smart move. It directly addresses a common criticism of crypto ETFs and makes the product far more attractive to a wider audience. This, along with the commencement of a redemption program and the uplisting to NICE ARCA, are all positive steps towards making this ETF function more like a traditional exchange-traded product. The core driver of their financial performance is undeniably the price appreciation of Solana. The significant increase in their investment in Solana is a testament to Solana's performance during this period. However, this also means the trust's fortunes are wholly tied to the volatile digital asset market. Any downturn in Solana's price would directly impact the trust's net asset value and investor returns. The introduction of staking is another interesting development. Technically, it could generate additional yield for the trust, diversifying its return sources beyond just price appreciation. However, they are being quite cautious here with fee structures that seem designed to capture a significant portion of those staking rewards, at least initially. The risks are still very much present. The regulatory landscape for digital assets remains somewhat uncertain, and any negative classification of Solana as a security could create significant operational and legal hurdles. The reliance on third-party custodians also introduces operational risks. In conclusion, Grayscale's Solana Trust ETF is undergoing a significant transformation, positioning itself for broader market acceptance. The financial results reflect the strong performance of Solana as an asset. The key takeaway is the strategic pivot towards greater investor accessibility and efficiency with the fee reductions and operational changes. It is a play to capture more market share in the evolving digital asset ETF space. The success will hinge on continued Solana performance and navigating the ongoing regulatory developments. Alright, that wraps up our deep dive into the Grayscale Solana Trust ETF's latest quarterly report. What are your thoughts on these developments and the future of Solana ETFs? Let us know in the comments below. If you found this analysis valuable, please hit that like button and subscribe for more corporate breakdowns. And do not forget to join our Discord community linked in the description. Thanks for watching, and we will see you next time on Corporate Decoder.